Hey guys, Jack here. Stick around after today's episode to hear how new clients can save 50% on AgYield's full suite of consulting and technology for 2025. This exclusive offer is available now until April 1st. Don't miss out. Terms and conditions apply. Check out the video description to learn more.
Good morning, everybody. It's Wednesday, February 19th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here, March corn down $0.0125 at $5.75. March soybeans were down $0.0125 at $10.3725, and March Chicago wheat was down 5 3/4 at $5.99. No export sales announced here this morning. We are now through 11 of 19 settlements for our spring crop insurance discovery period. This morning, corn sits at 471.5, and soybeans are at 1057. Yesterday, we had NOPA crush 200.4 million bushels. It was about 4 million bushels below the estimate, but still up 7.9% from year ago levels. So we continue to still see a really strong crush program. Good morning, guys. Not much in the way of fresh news, just a little bit more rumblings. Doge looking into ag. Looks like their first target's going to be some of these checkoff programs. I think they're digging in and learning more about how that program runs. So we'll have to see and continue to listen on news that comes out there. Also, more rhetoric from the administration on 25% tariffs on automobiles, semiconductors, and pharmaceuticals. So they're looking kind of the first part of April to kick those off. So it'll be interesting to see how that plays out. Ben, what's on your mind here to start the morning? And then we'll throw it around the room to the guys.
Yeah, I think markets in the next 5 to 10 days have a lot of mechanical things that they have to go through. One of the special things about futures markets is we have a delivery period. Options expiration comes up on Friday. So I think there'll be some sorting out of positions. And one of the great things about the delivery period is you really get to find out a lot about the markets. The tide kind of goes out, and we typically have seen, the last couple of years, a little bit of a break into that period. So we'll see how it plays out. I don't see a full sale. Justin mentioned yesterday, would love to see a break to buy. I would agree with that if you get a big break into first notice day, it's probably an opportunity. Conversely, if we were to get a big rally following it, we're probably getting to the upper edge of where some people think that we can trade. So I expect us to move after options go off. And I know this is going to sound very pedestrian. We're going to move. I just don't know in which direction.
Wow. I mean, guys, that's worth what you pay to get.
All right. I can see it both ways, right? Are we going to squeeze the short, or are the longs going to have to give a little bit back as they face the threat of delivery?
Well, I think your point's well taken, really, Ben, honestly, because Justin's alluded to it a number of times too. It's just a healthy market. I think that's the key, right? It's what we want and what we've wanted for 18 months,
And I feel like we had, if it was 25, if we drop 25 or 30 cents after options expiration, I know what I want to do with it. If we were 25 cents higher, I'm not sure if I know what I want to do with it. So.
Yeah, no doubt. Jace, I thought it was interesting. So we were in, you and I had quite a few meetings yesterday, talking about crop insurance and things of that nature. And I think it is interesting from a couple of the meetings that we were in, just the grower mentality in terms of their opinion of planting corn versus beans as we sit here today. And I did, we've talked about it a number of times on the show, and certainly the ratio is telling them to plant corn at this point. But I thought you had a few interesting thoughts on how to, certainly without recommendations, but how you can go into March 31st and keep an open mind on, planting corn versus beans at this stage.
Yeah, no, absolutely. As this corn market's rallied, the balance sheets are at least your break-even numbers have gotten a lot closer to in corn, and beans seem to be tough. So I think it's easy for a lot of guys maybe to switch back to some corn acres. But yeah, having some of these meetings, right, talking through some of these ideas, it's like if we get into, the end of the month, that March 31st report, which I think could be the direction for the market, into the summer, where acres line up. But Dan, right, we had a meeting talking to a customer, like, why don't you, we can intend to plant corn acres, hedge them, right? And if, we were to get a big surprise and a big acre switch and beans decided it needed a rally and call some of those acres back, then we can, hedge beans then, right? Or if you have a big switch, right, you had corn down quite a bit, we can lift our hedges and switch it to corn. So just leaving some of those acres open and available to make that switch, right? Which we talked to with the customer, not having that nitrogen put down or not having that input put down where you're able to do that on some acres, might be the way to play it.
Yeah, certainly a spring, a person that has a spring applied program, because his point was like, look, I can tell them not to go ahead of me, if I got to make the decision. But it was just interesting how, it was a pretty certain, like, as I sit here today with a month and a half or 2 months to go, like, no, I'm not going to do that. I'm going to plant corn.
Right. Well, and we were talking through crop insurance, right? So we were talking
Correct.
about the guaranteed revenue that we could expect or at least somewhat count on the insurance side on corn and beans. Just we couldn't make it work necessarily, right? And he hasn't, this grower, right, got really good bean yields a few years ago and really been kind of disappointed the last couple of years.
Yeah.
Right. So, and I think every grower knows this, right? Beans are just, at least it feels really unreliable, if you're going to get 70 bushel beans or 65 or 85 or 90.
Yeah,
right?
they'd rather bet on corn.
They'd rather bet on corn. And if you can guarantee that revenue now, and I mean, if you can afford it, right, if you can actually get the capital and all these other things that go along with planting corn, might just feel a little safer, right? You can, count on the yield, or at least feel like you can count on the yield a little more, had a, better handle on how the year is going to end up. And beans seem like a little more of a wild card. So we'll see. There could be a big switch. Beans could, if there were, I don't see the setup being there, right, for that to really happen. But if it were to happen, it probably would be kind of hard. Beans would have to have a nice run up, I would think, to make people a little more comfortable, picking up acres.
Yeah, I mentioned, just off the cuff, I was like, yeah, you had a dollar rally or something like that, and it just wasn't even that exciting to me. He's like, well, or two.
Yeah, right. It's like $1. Right. Well, I mean,
Yeah.
we set last year, right? We set a spring price for beans at $11.66.
Right.
Right. So we're quite a bit lower than that. And corn's, so far it's going to be a little better than last year. So it makes sense. It's going to be hard to fight that flip, right, year over year on acre switch, I think.
Yeah. Justin, does that jive? What do you think?
We'll see, I guess.
Yeah.
For a lot of reasons. I mean, we're trading obviously more corn acres. We've talked about it a lot in here. It's just gonna be a matter. That's gonna be the $1 million question. Is just people like their rotations, and how many acres are we talking about? So there's always some percentage of acres that can switch. I think when you're talking to growers, here in the heart of the I states that can get really big bushel corn, I think that conversation's, you can get skewed by what that means to that set of growers versus the rest of the acres. And then what percentage of those acres are we talking about? On the flip side, expenses have continued to go up, inputs have continued to go up. So that's, are we talking 95 million acres, 96, 97? 97 was back in, 2012 at a ratio like this in really high prices. So what number of acres are we talking about? And we're probably getting acres, we're probably picking acres up from cotton, and some of these other crops as well. So it's just this is why this time of year, this is why these kind of premiums and these markets start moving around this time of year, because it's just so hard to know. You can get I've gotten this trap too. You can get in a really strong bias from your local area, what's going on, and you think, oh my God, everybody's switching, 10% of their acres, and it doesn't seem to happen. The 1 year where it really happened was in that, kind of 2007 timeframe where Bush announced these massive ethanol mandates, right? And it was obvious that we needed 1 billion more bushels of corn every year for 5-6 years. And the ratio, it did what it needed to do, went to 2-to-1, and we got a ton of acres. So are we in that kind of an environment? That's the tough question. Getting above 96 million acres, 97 could be tough. With not being wildly profitable. Yes, it is better. Corn is, this rally has been a blessing, but you're talking about working in some strategies to kind of be break even or, kind of profitable. We're not wildly profitable. So again, this will be another, history lesson, on what it takes to get, big acres to move. Corn's trying its best, but we are, we're still selling it. We're still the most competitive after this big rally. So we're in a demand market. I think January is going to set a 30+ year record on exports for corn.
Yeah.
So it's, people arguing that we're just rallying because of the funds. We're breaking 30-year records on exports. We're in a corn demand market. So it's trying to buy acres. We'll see how successful it is. We've got what, 7 trading days left to set that crop insurance price. So
it definitely feels like it's at the expense of beans, right? It's not like we're setting this really high corn price, to your point, right? It's not this, hey, you can go lock in a margin in crop insurance or lock in a margin, right? It's tight. It's not a known in corn, but it's definitely just feels like the market wants to discourage beans.
Yeah, which is interesting, right? Because you've in the nearby spreads have kind of been weak, but you still have a July, kind of an old crop, new crop inverse in beans. Even with this big South American crop that we've been trading, all these different things going on. So it is kind of interesting. It's not like beans are falling apart. They're just not really participating as much in the rally. And you've got a good inverse in corn. Obviously, I think we're trading a lot more corn acres right now. But also at the same token, which we've talked about, is D's 25, D's 26 is inverted. Yeah. So you've got these inversions going on with, we're going to have way, too many acres. So it's definitely an interesting year. We've been meeting with a lot of banks as well, and it's not like they're high-fiving on how much money they're making. It's quite the opposite still. So that is still going to be a big question is, are they going to say, hey, I want to plant, 30% more corn acres and borrow this much more money? I don't know. I think, yeah, if, you got growers that own all their ground and make money at, $3 corn, yeah, they're probably going to plant a lot of corn. If the 80% of the country that rents and has high rent and all these other things, like that is a consideration on how much money they want to put out at a crop that's, right now you're betting on, hey, I'm going to have a record corn yield and I'm just going to plant a bunch of corn because I'm going to get a record. And that might be what ends up happening with the mentality, but we're not.
A lot of chips on the table.
It is. And so that's why there's just so many moving parts here to try to figure out. Now, is the farmer mentality in general just more optimistic on corn? I'd say yes.
Yeah.
So maybe it's just a positive attitude towards, what corn can do. We've seen that a lot too, where it's, not necessarily price, which is what we like to focus on and what you can actually do today. It's what they think might happen tomorrow. So it's an interesting one.
Yeah. So a number of people posed the question yesterday too, Justin, if you put a gun to your head, do you think this market right now is absorbing 95 million acres?
Yes.
Okay.
Absolutely.
Okay. So that's where we're at.
Yeah. I think we're trading 95 plus right now.
95 plus.
So the big shock would be, 94.
Sure.
Some number that would be less than that would be, I think, a big shock to the corn market because we're tight. We're still selling it. We're all these things. So we'll see.
Yeah, and your point is a 5 or some kind of number is that 97 threshold or something like that.
Yeah, I think north of 97 would be tough, but we went through the ethanol. What I was talking about, we gained 15 million acres. We were down that day, and that was it. And then we kept rallying. So these markets are they're tough. We were joking about it at a meeting yesterday. It's like if you got the report ahead of time, I'd probably be broke on a lot of these reports, so just like Beeks, trading places, right? So
I'm sensing a good fun fact Friday here, Brian. Teeing you up here, buddy. No, very good. Well, we got a couple minutes here before we open. Rye, yesterday, looks like in the livestock we got slower slaughter. It's got had fats finished lower, but feeders still continue to truck higher. And then in the hog side, came out hot and kind of gave it all back towards the end. So what are your thoughts here today?
Yeah, cattle market still new lows for the move here. Just haven't really gotten any news to kind of spur any support. We've got the discounted board here, so I think that's really where the focus is. The managed money's still pretty long here, so overall, I think there's just a lot of eyes on cash right now. How weak is it going to be? And we've already seen just some really light trade in Iowa at right at $2. But generally the expectation is going to be for lower kind of across the board. So we'll see how that reacts. Cattle on feed here on Friday is going to give us some indications of just what to expect kind of supply wise down the road. And they're looking for on feed Feb 1 at 99.2. Placements we're looking for 102.7 and marketing's 102.2. So we'll see how the market reacts to that. I think we're going to price in those estimates today. Obviously the bigger placement number is maybe going to cause some caution here. So wouldn't be surprised to see a little bit of weakness here today. But on the hog side of things, bellies were down $10. So I think just that kind of stopped the rally dead in its tracks. I think the product market has been a really big source of strength. We did have new highs in cash at 91.79. So demand wise, for at least on the cash hog side, is still really firm here. But overall, that big down in bellies, I think, is going to cause some concern. So maybe that's kind of backing off a little bit here. So, we're whipping around here. We're right near the contract highs, almost retested last week's highs. So, I mean, some great opportunity from the production standpoint, but overall, it does feel like we can get pretty volatile here if the product market's going to fluctuate like this.
All right, very good. Appreciate the update there. We've got just came into the open here. March corn down a penny at 5.01. March soybeans are down a quarter, about unchanged at 10.38.5. And March Chicago wheat is down 5 1/4, 5.99 3/4 is the last. One thing to note, we will have export sales that'll be out Friday. They're going to be delayed a day due to Monday's holiday, so nothing to report there tomorrow. Those will be out Friday. So we'll take a look there. And also, Jason and I kind of alluded to it, but we are actively meeting with folks very heavily on crop insurance right now, talking about crop insurance, some different marketing strategies. We've got a great offer up till April 1st. Jack will have some more info in the outro, but it's, half off for new clients coming on board. So love to visit with you if you've got, want to bounce some ideas or get a second opinion, things of that nature. Give us a call. I'm more than happy to visit. Also, appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. It'll keep you up to speed on everything that's going on with AgYield. And again, thanks to everybody that supports the show. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day, and we look forward to talking to you again tomorrow.
Thanks, Dan.
At AgYield, we know that farmers are constantly confronted by new challenges, and 2025 is no exception. Markets are volatile, margins are shrinking, and lender confidence is in free fall. Farmers need industry support now more than ever, which is why we are offering something truly unprecedented. From now until April 1st, new AgYield clients can access our full suite of consulting services and cutting-edge technology at 50% off. This is more than a promotion. It's our way of extending a hand of support to farmers when they need it most. From precision grain marketing to innovative risk management strategies, we're committed to protecting your farm's profitability and building a stronger, more sustainable future. And together, we can weather the storm ahead. Visit us today at agyield.com or call 855-266-6241 to get started. Terms and conditions apply. Check out the video description to learn more.